Although a Boeing strike and a spike in imports caused U.S. economic growth to likely stall in the fourth quarter, robust domestic demand is expected to keep the Federal Reserve on a path of modest interest rate cuts this year. It is also anticipated that the Commerce Department's GDP report on Thursday would demonstrate that consumer spending continued to expand at a strong rate during the previous quarter. A robust labor job market that is producing strong wage gains is supporting consumer spending. The U.S. economy last year resisted grim predictions of a recession that had been fueled by the U.S. Central Bank raising rates by 5 percentage points in 2022 and 2023 to contain inflation. After lowering the rate by 100 basis points since September, the Fed maintained its benchmark overnight interest rate in the 4.25%, 4.50% range on Wednesday, as the first significant move of President Trump's second term. The statement that inflation has made progress toward the Fed's 2% inflation target was eliminated. According to Fed Chair Jerome Powell, the economy is strong overall. In the election held on November 5th, President Donald Trump won because of the public's discontent with the economy. According to Boston College economics professor Brian Bethune remarks, the economy has done very well so far. Bethune added, everybody has benefited to some extent, but there still are some underlying problems in terms of distribution of employment, earnings, and wealth. According to a Reuters survey of experts, GDP accelerated at a pace of 3.1% during the July-September quarter, and then probably expanded at an annualized rate of 2.6% last quarter. The study ended before statistics released Wednesday opened that the goods trade imbalance had soared to a record high in December. This led the Atlanta Fed to lower its GDP prediction from an initial estimate of 3.2% to 2.3%. An estimated 2.8% growth is anticipated for the entire year. In 2023, the GDP expanded by 2.9%. When the Fed started its policy easing cycle in September, it predicted 4 rate decreases. This year, it is only expected 2. As they await more developments on inflation, which appeared to be stalling out late last year, central bank authorities decided to maintain borrowing prices at a range of 4.25 to 4.25%.